Are you ready for a roller coaster on Wall Street? This New York session is going to be highly volatile. Let's discuss what is going on. The benchmark indexes had a quiet session on a Thursday. Wall Street investors watched a plunge in oil prices and anticipated fresh non-farm payrolls. The Dow Jones edged down 0.26%, the Nasdaq climbed 0.41%, and the S&P 500 closed almost flat at 4,152 points. The major indexes traded slightly higher in the New York pre-market. However, in the early session, they went down in sync. The S&P 500 is expected to trade in the corridor between 4,030 and 4,110 points. Wall Street fluctuated quietly yesterday as the market awaited the crucial government report on the U.S. labor market. Analysts had projected 250,000 new jobs in the U.S. private sector and a flat unemployment rate at 3.6% in July. The actual data differs greatly from the expected ones. The U.S. economy created 528,000 jobs last month, much higher than the forecast, from the upwardly revised 390,000 jobs in June. The overall employment, excluding agriculture, increased by 22 million jobs since the pandemic low in April 2020 and improved to the pre-pandemic levels. Besides, the jobless rate inched down to 3.5% in July, the lowest figure since February 2020, from a 3.6% a month ago. Analysts had predicted a flat reading. The number of people out of work declined to 5.7 million. Earlier this month, the US GDP logged contraction for the second month straight that fits the definition of a technical recession. The strong employment growth affirms quite the opposite. Such a robust hiring paints a picture of a healthy economy. The strong labor market might assure the Federal Reserve to venture the third rate hike by 75 basis points at the nearest meeting in September. However, a lot will depend on inflation metrics. Last week, the U.S. central banks raised the funds rate by 75 basis points, so the key interest rate has increased by 225 basis points since March. Immediately after the non-farm payrolls, futures on the U.S. stock indexes went down firmly. As for the season of corporate records, Refinitiv estimated that 77.1% of 110 companies included in the S&P 500 reported higher than expected financial results. It set the stage for a rally in the S&P 500 and the Nasdaq. Both indexes have been growing for 3 weeks in a row. Nevertheless, in the light of the fresh economic data, all gains could be negated. Indeed, the success of some companies will hardly refrain investors from emotional sell-offs. So the upbeat non-farm payrolls are a nightmare for stocks, but a paradise for the US dollar. Its index had been losing ground since the US GDP data and was trading flat at around 105.70 earlier today. In response to the strong employment data, the index climbed a whopping 1.1% to trade at 106.80. It's likely to trade in the intraday corridor between 106.30 and 107.20. Now, the market understands that the US Fed has a widely argument for another aggressive rate hike. Federal Reserve Bank of Cleveland President Loretta Mester made a hawkish statement on a Thursday that the central bank should raise interest rates above 4% to push inflation down to the target level of 2%. Earlier this week, Fed's policymakers said that the regulator is determined to pursue the same aggressive monetary tightening. Now, in light of the red-hot employment statistics, there is no doubt that the Fed will hardly pause and moderate the pace of further rate hikes. The loonie has no chance to defend amid the greenbacks rally and the fall in oil prices. The USD CAD pair is trading higher at about 1.2978 at the moment of recording this video. The pair is likely to hold in the corridor between 1.2920 and 1.3010 today. Yesterday, WTI dropped 2.44% to trade at $88.45 a barrel. Brent crude tumbled 2.83% to trade at 94.04, and oil quotes were in a nosedive for the most of the day, but the strong non-farm payrolls proved that recession fears could be exaggerated. Today, Canada also reported on its labor market. The data showed that employment unexpectedly contracted in July. The Canadian economy lost 30,600 jobs in July, defying the consensus of 20,000 new jobs. Thus, the economy has been losing jobs since June. The most layoffs were recorded in the public sector and the services sector. At the same time, the jobless rate remained at 4.9%, the lowest reading in history of such surveys, a downtick from the expected 5%. As for the crypto market, Bitcoin added 4% on a Friday to trade at $23,410. The token lost momentum on the way to 23,500. It still lacks the bullish energy to surpass the landmark resistance level. In fact, the crypto has been oscillating in a tight range between 22,500 and 23,500. The news on the crypto industry has been mixed. Block Incorporated, with Jack Dorsey at the helm, reported losses was 36 cents per share in the second quarter, down from 40 cents per share a year ago. Besides, the company plans to fire employees and slash investments by $250 million in 2022. On the plus side, the bankruptcy court in New York has given crypto firm Voyager Digital Holdings Incorporated the approval to return $270 million in cash to its customers. Despite the positive news, Bitcoin has been locked in a narrow range following the Nasdaq dynamic. If this correlation works out today, the flagship crypto is expected to pass the lower border of the trading range. This is a realistic scenario in light of the upbeat US employment data and the response on Wall Street. The token could sink below 22,500 and extend its fall. Alternatively, it could retest the level of $23,500. Trade with the profits with the InstaForex and have a nice weekend. See you on Monday.